You hear it all the time, right? How AI is going to solve the world's biggest, most stubborn problems. But what happens when that amazing promise crashes right into a messy reality? Well, today we're going to look at exactly that, using AI to get money into the hands of millions of people who need it. So let's jump right in. Let's start with just one number. This number is really the whole story. 40%. In Nigeria, and we're talking Africa's largest economy here, a staggering 40% of adults are completely shut out of the financial system. Just think about that. No loans, no savings accounts, none of the basic tools you and I might take for granted to, start a business, handle an emergency, or just build a better life. So here's how we're going to break this all down. First, we'll look at something called the credit paradox. Then, we'll dive into how AI could be the answer. We'll see how these AI models were put to the test, what's actually happening on the ground, and finally, how we can connect the promise of this tech with the real-world needs of people. All right, first up, the problem. It's this classic catch-22, and it's trapping millions of people. So what we're talking about here is financial exclusion, and it's a ridiculous loop. You need a credit history to get a loan, but you need a loan to build a credit history. See the problem? It's a huge wall, not just for people trying to get ahead, but for the whole economy. It just crushes new ideas and traps folks in poverty. And that's where we get this credit paradox. Now, microfinance banks were supposed to be the solution, right? But the way they've always done things is, well, it's slow, it's manual, it's some loan officer making a gut call, and that whole process is expensive and super hard to scale up. So the irony is, the very people the banks were designed to help end up being the hardest ones to say yes to. Okay, so what if you could just change the rules of the game completely? This is where AI steps onto the stage. It offers a totally new way of figuring out who's a good bet for a loan. Think of it this way. A traditional loan officer is like a detective who's only allowed to look at one old, dusty piece of evidence, your formal credit report. If you don't have one, sorry, case closed. But an AI, that's like a super detective. It can look at hundreds of clues. Are you paying your phone bill on time? What do your mobile money transactions look like? It pulls all this alternative data together to get a way richer picture of who you are financially. And it does it all objectively, without needing collateral. Okay, that all sounds amazing in a sales pitch, but does it actually, work? Well, a group of researchers in Nigeria decided to find out. They basically set up a head-to-head competition for AI models. So they got their hands on a ton of real data from a microfinance bank, real loan applications, and then they let 6 different machine learning models loose on it. It was like a digital horse race. The goal was simple. Which AI is the best at predicting one single thing? Who's going to pay their loan back and who's not? And it wasn't even a close race. The results were pretty mind-blowing. Now, what you're seeing here is something called an AUC score. All you need to know is it's a measure of how good the AI is at sorting the good loans from the bad ones. A perfect score is a 1. And just look at this chart. The top models, especially something called K nearest neighbor, they absolutely crushed it. Let's zero in on that winner for a second, the K nearest neighbor model. It scored a 0.983. To put that in perspective, that is unbelievably accurate. It's almost perfect. The AI could look at the data and with incredible certainty, pick out who was a safe bet for a loan. So the takeaway from the lab is crystal clear. The tech works. I mean, it really works. It can predict creditworthiness with shocking accuracy. But, and this is a huge but, what works in a lab doesn't always work in the messy, unpredictable real world, right? And that brings us to our next chapter, reality. Another study went out across the whole country to see how these banks are really using AI. And what they found? Well, it tells a very different story. This is so interesting. Look at this table. It shows what banks are actually using AI for. And what's number 1? Fraud detection, stuff that protects the bank. And way down at the bottom, things like customer service, the really important one, that new kind of credit scoring we just talked about, it's just stuck in the middle. The researchers have a name for this. They call it a security-first approach. They're using AI to protect themselves before they use it to help customers. So why is this happening? What's the holdup? The study points to 3 huge roadblocks. First, data. A lot of banks just have messy data, and AI needs clean data to work. Second, the rules are fuzzy. Nobody's really sure what the regulations are, so banks are scared to jump in. And third, and this might be the biggest one, people. Yeah, that people part, the cultural resistance is huge. Check out this quote from a bank executive. many loan officers view AI as a threat rather than a tool. Think about that. They're worried about losing their jobs, about losing control. And that fear, it's a powerful brake on progress. And if that wasn't enough, there's another massive problem: a digital divide inside the country. AI's benefits are not being shared equally, not even close. In the Southwest, where you have the tech hub of Lagos, AI is working great. But you go to the Northeast, a region that's struggled with instability and has way less infrastructure, and the effectiveness just plummets. So let's recap. We have this amazing tech that's been proven to work. But in the real world, it's hitting a wall of bad data, confusing rules, and human fear. So how do you fix that? How do you bridge that huge gap? Thankfully, the research gives us a pretty clear roadmap. Okay, here's the 3-step plan. Step 1, take it slow. Start by using AI for things like fraud detection. Let people see it works, let them build some trust in it. Step 2, don't replace people, help them. Make AI a co-pilot for the loan officers, a tool that gives them better information, not one that takes their job. And step 3, the government needs to get smart. No more one-size-fits-all rules. They need to create these little regulatory sandboxes where policies can be tested and tailored for different parts of the country. What works in Lagos might not work in the Northeast. Which leaves us with this one big question at the end of it all. We know the AI can predict risk. The math works, the code is good, but can it overcome reality? The biggest challenge here isn't about algorithms or data. It's about us. It's about infrastructure, it's about politics, and it's about our own fear of change. That's the real test.